2024, it was down 14% year over year. So it's almost down by half. But we're in a new year of 2025. So I think part of what we're going to start with for the panelists, we'll have them introduce themselves, and then we'll ask them about the future. So why don't I go, won't you start here?
No problem, with pleasure. Thank you very much for the invitation. My name is Stéphane Pouyan. I'm the chairman of Green Powerhouse. I actually spent 20 years in a company called Euroclear. Euroclear is the largest clearing platform in the world with 40 trillions of assets under custody. So the whole challenge is to see, how much of that money flow into this industry. And I think the panel will try to address that. Thank you very much.
Only 40 trillion, okay. Derek, I think you have passed one.
All right. Hi, I'm Derek Brooks. I'm a principal at 2150 VC. 2150 is a Series A climate tech fund focused on decarbonizing the built environment and industry. So very much focused on physical assets, though we also look at software to optimize those assets, as well as physically decarbonizing through new materials or technologies. We've been around for 4 years. We're now deploying our second fund, and very excited to be here.
Thank you all. I swap that one. Figure that out. Hi, my name is Fiona Bannister, and one aspect of the world is that I have the opportunity to have invested in deep decarbonization for more than 30 years for me, and working in also the other side of research and innovation. I have a nonprofit called decarbonized.org, and we have another nonprofit called partnershipsforchange.org. And so we're research science based. So a big part of the world of deep decarbonization, for me, we can talk about solar. I've co-invested with others into small nuclear. We've done solar. We've done alternative areas. But the care that I care about, the care that's the core, is forests, food, sanitation, health, and water. So for the base root of all of that comes what I say, from the mud comes the lotus flower. We just competed in the X Prize Rainforest Conservation as the semifinalists with our indigenous co-leaders, who were the shamans, the doctors, the environmental lawyers, that structured and built out systems so we can measure and monitor using drones, using environmental DNA, but also enabling AI and tech to actually be able to measure through what is the value of our universe, what is the value of our gut biome and the biome of the earth. And now we're coming back out to do a biodiversity series of credits and then bonds, and building out more economic models around it. I was a microfinance investor, and so I've been in a tech investor for a long time. But tech for good that actually is on the ground, in the hands, and also that helps people thrive and survive. Thank you.
Great.
Thank you, Fiona. Hello, I'm Bryony Cooper. I'm a director at PT1, which is also a venture capital fund, and working in a very similar space to Derek, actually. So we do a little earlier stage investment, so pre-seed and seed Europe-wide. But we're also looking at the built environment. So we used to be called PropTech One. So our essence came from real estate and construction tech, also some infrastructure. But in the last couple of years, seeing the massive growing need, we also transitioned into the wider ecosystem around the built environment. So that includes energy transition, and the niche that we're looking at now is climate adaptation tech, and especially how is the climate crisis impacting urban areas and the world that we live in. Prior to that, I was a serial entrepreneur myself, so I built a few companies before jumping to the other side of the table. And I'm mentoring women founders a lot to try and bring up some more voices in this space. But yeah, very happy to be here.
So you can see we have a really diverse panel. We have $40 trillion on the later stage. We have earlier and mid-stage VC. We have family office investing. So good perspective. My background, right now I'm running a deep tech startup that's building a next generation solar panel. So I've been deep involved in fundraising since I've been doing that, which means I'm both very, very good at handling rejection, but also I've been successful at raising money, and we're just closing a round now. So I have a lot of experience at talking to most of the VCs on both sides of the pond. So why don't we start out with a short answer from all of you guys. All right, it's down 50%. It's a lot. What's going to happen in 2025? And why don't we'll go down the line. Is it going to go up, down, flat?
Well, I don't know. This one is dead. Okay. As you said, I start with a different perspective because Euroclear, 40 trillions, if you were to just move 1% of it, that would solve the problem. So the whole question is why this 1% doesn't move. So I think that 2025 is not going to help because it's going to take a little bit more time. When you look at it at the level of these 40 trillions and you ask yourself who have this money, you look at it and you understand that it's long-term money. So it's a central bank reserve, wealth funds, pension funds, state pension funds, and the like. So that's really the citizen money. The citizen money is actually not moving to support that industry. So that's a fundamental problem. So then you want to ask yourself why the government doesn't take its lion's share to move this 1%, not even 10%, not even 20%. You could argue it could be much more. But anyway, 1% doesn't even move. And one of the fundamentals is that the majority of the ones that would benefit from this decarbonization come from the Global South. There is absolutely no money flying to the Global South. If you look at it in details, experts like these guys here next to me, you will see that over the last 5 years, they pulled out of the Global South. They didn't put in, they put out. Leaving a little bit of a space to the Chinese, to be honest. You mentioned that in the previous panel, the Indians as well, and all of that are entering into this space in full speed. But it's still small money, small tickets. So what we are trying to do at Green Power House is that we are trying to recreate a financial backbone that supports this energy transition at scale. I mean, this whole industry at scale. And that will take a little bit of time.
Okay. Well, before we go to Derek, I just want to make a comment that on the Global South. So some of the biggest deployers of solar energy last year are actually in the Global South. So places like Pakistan, Bangladesh, Nigeria have triple-digit growth in solar, and I don't know how they're getting it funded per se. Maybe it's the Chinese. I don't know. Maybe we can come back to that. Derek.
I think this works now. Excellent. So on the question of the reduced climate tech deployment, that was the right.
Well, more of it. So it's a fact. It's gone down about 50%. So is it going to keep going down? Is it going to go back up?
So I mean, I think there's a couple things at work, right? There's some that are structural, and there's some that are actually issues. If we look at climate tech investing from the venture side specifically, that are particular to venture. One is if you look at where are all the venture dollars going, and it's all being dumped into AI and data center infrastructure. Right, there has been, besides I would say the dearth of actually venture allocations from LPs, the few that are, being made are going to funds that are deployed in that area. Right, maybe it's a hype cycle. Or it's the, grand design of the next few years. But that's also reality. The other reality is that climate tech, even in 2.0 or 3.0, has not returned capital back to investors. The people that make allocation to venture funds in climate tech have not received any capital back. And if we're not thinking that that pie is growing until capital is being returned, they're not going to be reallocating. That's structural. But I think, I'm actually optimistic for 2025, and I put it in this direction. Not every climate tech company labels itself as a climate tech company. I don't know if that has to do with the current mood in the US, particularly around themes of sustainability and ESG. But sometimes I find as an investor, I am doing the work to discover that someone is actually doing industrial efficiency play. They won't necessarily market themselves that way. And that might be okay. If that is really the trend, that's okay. Because in the end, I hate this jargon, but someone used it yesterday and makes sense. It's, no more green premium, green discount, right? We should be investing in things that are lowering operating costs for the consumer or for industrial players today. And I'm seeing quite a lot being developed in that space. So I'm optimistic. I think the statement made on the Global South is particularly relevant. My background before coming to Climate Tech VC was in infrastructure in emerging markets, private equity. There is less money being deployed at that later stage that is doing true infrastructure investing, particularly in more frontier markets that are the best places for solar and wind that do need to increase their grid. I don't know if that's actually the role of Western VCs. In some ways, what we need to think about is how do you build up local capital markets and systems to deploy where it meets best. So that would be
Okay, great. Fiona, you have many hats, but one of them, and one on right now, but one of them is on the family office side. Maybe you could speak particular about how are the family office institutions, how are they thinking about investing in the climate in 2025?
First of all, I never call it a family office. I call it a family forest because I absolutely believe and have dedicated a tremendous amount of time in my life to being in jungle with the Amazonian leaders, with the shamans, working and learning, whether it be the years of my personal life in Mozambique or in Asia, or working on the HIV crisis. I've just been this year in Sumba Island working on malaria and food and nutrition and health systems and looking at building this. So where you talk about the deep decarbonization, one of the greatest is our forests, our food, and our water. And so a big pivot in our sort of global group of tonic members or family office members that have dedication, there's been a radical change. A lot of us have assets. How do we decarbonize our own personal assets? And how do we inspire and bring forth that community opportunity of uplifting, especially for the next generations, whether it be my own daughters, who one is now in environmental engineering studying that, but she's really critically, I would say, engaged. She has been in Panama. She's been in environments that are really on the edge of transition, where the forests, the combination of planting more trees, building up nurseries, working with the teams of the women, and the young women are now trained by Smithsonian to monitor and measure and mitigate the rarest plants in the world, which are also our medicines. So I think when we talk about decarbonization, we have to really look at the biggest sink in the world, which is our actual Earth. And so there's every areas in investing where we use blended capital. It's an essential part. Right now, I'm working on Mint Energy. Mint Energy we're doing for the Zulu Nation down in South Africa. It's a $2.9 billion large infrastructure. And the biggest piece in there is that I have to have an arc nuclear reactor to take the waste to energy. And from there, I'm doing fuels, natural fuels. I'm doing ingredients that do agriculture. We do pesticides that are non-toxic. So that was from a board of when I was on Solios. So then you bring in the other. Last is the graphene batteries that are going to power your amazing solar, because we don't want to extract from the earth. We want to use the earth's waste to make the next positive part for energy. So that's the core.
Okay, great. Brianni.
Thank you. I think that the language we use around the whole narrative is going to make a lot of impact on how much gets invested, actually, because if you look in different parts of the world, so in Europe, a lot of startups will talk about ESG, whereas to US investors, it's just synonymous with over-regulation, so that might make them more nervous about investing. And as Derek was talking about, financial returns, we had a few years ago clean tech, didn't pay off. Investors lost a lot of money. Of course, that makes them nervous. So now we've kind of rebranded as climate tech, and we're having a resurgence. And of course, technology's come along quite a bit in those last few years. So we have better opportunities using technologies like AI to facilitate that. But we have to kind of win back the trust of the investors, I think. And the other thing is, I think from a VC perspective, it is important to specialize, because climate tech is a very broad topic. And also, as you were saying, Derek, quite often companies are not marketing themselves as a climate tech company, but of course they are having environmental sustainability benefits just from whether it's digitization or automation. So I think, it's all about kind of how you brand it and how you package it and what language you use of where we're going to end up investing our dollars without being too nervous.
So where are you guys finding the areas that you're interested in 2025, and maybe the areas that you're not interested?
So for us, of course, we have the expertise of the built world. So even though oceans and forests are super important to us, that's not our background or area of expertise. So we're focusing on those built areas where we live. So everything to do with infrastructure resilience. So that might be advanced materials. How can we actually build from the ground up to be more resilient against the climate crisis and weather events, but also looking at how can we use hardware and software together in collaboration. So we have software that's doing kind of climate risk analysis for companies, and on the other hand, we've got IoT solutions that are doing early risk monitoring and early warning systems that is going to be really important. And then also looking at the difference between mitigation, it's I think something like 95% of the capital invested right now is into mitigation, which is super important, but we're not doing enough focus on climate adaptation and resilience. And looking at the next 20 years and what a mess it's going to be, we have to focus on that as well. So that's why we're specializing in adaptation and how can we bolster urban areas where we're living to be more resilient.
So we were talking about that earlier. Before we move on, I'm just curious, can you give some examples about what does a climate adaptation investment look like?
Yeah, so the one I just mentioned about early risk detection, for example. So in my previous fund in Poland, we invested in a company called Windvox that's working with wind turbines. But they use sound sensor technology to have a non-invasive risk monitoring and like early detection system, which is fantastic because normally if you want to repair or there's some downtime on a wind turbine, you're losing so much money to repair and do maintenance while it's offline. But this actually is a non-invasive solution. So I think something like that where it's using IoT, it's using AI, and it's increasing the efficiency of renewable energy. So that would be one example.
Okay, great. Derek.
So in terms of our focus, I think I'm not going to talk about this part too much because you covered on the last panel, but thinking about grid orchestration, flexibility. I mean, if you looked at corporate power prices in Germany, this past year is absolutely insane. I don't know how you do business as a German SME when you don't when you experience these kind of wholesale prices. So that's something that we're definitely going to spend more time on. And corporate power procurement is a part of that, as well as flexible storage. On the adaptation point, maybe I hate feeling like I'm jumping on a trend, but we're doing a big, deep push in this space. We have accidentally invested in adaptation. We have two companies I like to point to, particularly one is Nature Metrics, which is a biodiversity monitoring software, right? You have to really start with the measurement and how do we know where to put our efforts around the nature economy unless we actually know what species are there and how they change over time. And the other, and this is the one that I think is going to be the biggest for my portfolio in the Global South, is a dehumidification technology. We're going to be experiencing, especially where the majority of the humanity lives, increased weather systems, increased heat, cooling in other places, which is going to put a lot of pressure on the grid when it comes to putting in air conditioning. And if our air conditioning is not reduced in terms of energy consumption by 90%, we have another problem, right, to where humans live. And that's going to be a Global South issue. So we've started this journey. We're looking also into parametric modeling. We're looking into insurance schemes. What we've struggled into is what is investable now, because who's going to pay for physical infrastructure at this moment.
Just one follow-up on that. So you mentioned a lot of software things, but one of the observations I think I've made with investors and venture capitalists is that they tend to want to invest in software, but climate change is actually an earth science problem, right? So you need physical things. How do you think about that in terms of the disconnect between climate VCs who want to invest in software, but that's not how you solve climate change for the most part.
My dehumidification company is clearly a hardware company. Come on.
Fantastic.
Man. Come on, man. But right, I mean, look.
I'm not picking on you per se. I'm just talking more about for this group and the overall sector.
Look, I mean, software only exists as an asset class because we have legacy hardware to work it with, right? Yeah. And if we think of that, there are innovations across robotics, across chemistry. Of course, I mean, it starts with the physical world, and we think of some of the most valuable companies actually right now, right? Think about I hate to say it, but think about SpaceX and Tesla, right? Those are hardware. I mean, they are software-ified hardware companies in the end, right? It's the iPhone, right? All the software applications in the mobile space was only enabled because of something like the iPhone developing. So we do have to spend a lot of time with it. And then dare I say, now we have to talk about something called first of a kind, right? Folk. How do we fund these initial manufacturing when it's all going to be loss-making? It's not a traditional VC area to think that you should sell a product at negative margin for the first 5 years. This is a very difficult mental shift. We do focus a lot on hardware, but we have to be very careful. We look for where are the off-takers, where's the non-dilutive financing coming from. Until like 2 days ago, right? Grants in the U.S. were particularly helpful in getting these off the ground. But yeah, I mean, but you need a balance, right? We do have a responsibility to return capital to LPs. So
Can I want to see if you want to jump in, then I want to go to you. Fiona.
Okay.
So you,
Yeah, maybe it's a little bit of thought-provoking feedback. I personally, I told you, I spent 20 years at the heart of the capital market. I don't think that, to all due respect for the VCs and everything that they've done, and it's fantastic, but as you rightly said, they kind of follow the money, all right? And there is a huge amount of money to be made on the software-related side of the climate change, because a lot of people are very interested by that, and it's easy return. But the true fundamentals, as you said, have to be able to support a 12 to 15 years capital intensive investment. No way that the VC industry can be part of it. I mean, a tiny part of it, but they can just tag along. They can't basically lead that path. That's why this decarbonization over the last 10 years is not really picking up. Okay? So you talked about Pakistan, you talked about those things. If you look at the fundamental deal equation, these are intergovernmental deals. It has nothing to do with normal money, if I may say. It's called, concessions agreements over 99 years and all of these things. That's why we are working with the Inter-American Development Bank and the IFC and all of that to put in place this infrastructure backbone. Only government-related institutions of that scale can put 1 to 2 to 10 billion, 100 billions of investment to actually put in place the infrastructure that is required. And the Global South has to look at this climate impact with a wireless mentality.
yeah, unfortunately,
There's no chance that they will be able to actually put in place the necessary infrastructure. So even the green energy deals, the solar panel, and I know you are in this field, but nonetheless, you can't transport it if you don't have infrastructure. And that's the whole challenge of those deals that collapsed. A huge amount of deals collapsed because people thought only about the green energy project rather than the whole ecosystem.
yeah. Unfortunately, I agree with you. And it was just an anecdote. I was about a year ago. I was at San Francisco Climate Week, and there was another panel like this with 4 VCs, climate VCs, and they were asked the question, kind of about software and climate. They said, well, if you have to choose between your LPs getting a return or having being good for the climate, what would you choose? They're like, one of them said, let me tell you a little secret. Our LPs don't give a shit about the climate. They just want to make money. And then all of them said, yeah. So it's a trade-off.
Well, there's some of us that are in it for the long run. So let's keep it on the positive basis. I mean, I talk about my nonprofit, but I am also with 2 different VC, non-VC, private equity, large scale. We do infrastructural finance, building up systems with governments, with people. I don't need to think about food security. I get to go and work in Zambia. I get to go and say, these are systems that can help finance. And yes, we have solar, but I have a lot more interest to be able to scale things. So right now, part of SK Capital Associates, which is a multifamily office, we have the capacity. Not only have we got some of the top investment bankers and mitigation lawyers that have been in their environmental social justice type background, because that's my passion, and then I've got other family offices that are involved. We can scale in the billions now. We can't go as far as you go, but we're way out of the VC. We've never looked at a VC cap table saying we're going to return you something in 7 to 10 years. When we talk about deep decarbonization, it's a long run, and it's for everybody and for all our children. So 3 quick techniques that I use is, when you think about investing, what is it that you personally, because everybody can invest, whether it be choosing how you got here today, why we're all in Davos, where we take it forwards. But the second side of investing is, how do you term your longevity? of the impact of it. We've been forest investors. So there's a portfolio of forests. We have even generational forests. We have a 50-year note. We have a 100-year note. Yes, I can sell it to Shell, Chevron, who have to write it off. But, that's one area. Then we have
Fiona,
deep decarbonization just in our immersive data centers. And that's really important because 80% reduction with immersion 4 of the cost, the energy, the price. And then it's like green Lego. We can build it out and send it off. And then smart nuclear. So we have to come with a combined direction for that. Thank you.
I was just going to ask you, would you call a forest investment? Is that an investment or philanthropy or both?
Absolutely investment. This is what is the core of our values, and it isn't carbon. We're doing biodiversity. We do regenerative, full models. We buy back from the meat production industry in Panama. We get the cow pasture land that has been destroyed. We regenerate it. We rebuild it. We build coffee, food security for the communities. They are trained up, or they teach us. Let's get back to the reality. They teach us what they need, how they want to survive, what foods, the acai berry that was being stolen by an American company, put on public. They even tried to patent it. And it's like, no, it's not theirs. So I'm a bit of an activist. You can hear that. But I'm a reactivist where we put our money into places where we can cultivate strong models that bring really long-term returns. So that's about when I said there's 3 parts of your choice as an investor, because I think all of us are. When I asked yesterday on a panel on food security, who was also an investor in the room, 2 or 3 people put their hand up. And I was like, no. You're all an investor, whether it be what you do, what you eat, how you involve yourself. But who's managing your money? Which banks have you given it to? Are you investing or divesting and making choices where you're directing your finance? Because we have all the power. And why do the larger entities, or why do we give it away? I'm asking everybody to plant a tree, but really plant a tree, and also in your gut biome, in your health and nutrition, because if we don't stand in that area, then how can we actually think we're living longer or decarbonizing the earth? The earth is here. It's ours to protect.
Great, thank you. And Briani, and by the way, I noticed that Briani and her firm PT1 are sponsors, so thanks for that.
Yes, we are. You're welcome.
Okay, so got to give you that plug, right?
Thank you.
So we're in Davos, so obviously we're talking about money, but also it's finance and politics. How are you seeing, from an investment perspective, the current political environment, not just in the U.S., but around the world, changing your outcome on investing?
A lot. So I think a lot of VCs, PT1 included, historically have tried to remain fairly neutral to the outside world. Whatever our stance is internally, we don't really publicize that because it's a separate topic. But those days are over. I think the time is past when we can keep silent about this. So we've actually stepped up to take a very active role. I mean, we've got the German elections coming up ahead of us. Of course, we had Trump inaugurated just a couple of days ago, and that has a massive impact on a lot of companies and startups that are working in the climate space have been very dependent on subsidies and on public money, and those resources may very well dry up. So now it's so important, if they're fundraising, that they're going to actually have a financially sustainable business model, pretty early on, because they can't depend on those subsidies anymore. What we're doing internally is we're actually trying to provide a bit of a voice for the local ecosystem. So we're running a series of political events within our event space at PT1 in Berlin, where we're inviting the leader of each of the leading Democratic parties. There's a couple we didn't invite, that we didn't want to give a platform to, but giving them a chance to actually have a discourse with VCs, with serial entrepreneurs, and with companies in Berlin, to ask them, what are you planning to do about climate, about innovation, and about entrepreneurship, so that we actually have a very clear stance from the horse's mouth on their policies, so that we can make a more informed choice.
Great. Derek, what are you seeing?
So we did an exercise with all of our portfolio companies, especially the ones in the U.S., to really clearly lay out where all potential policy changes could impact them, both policy and then also what sort of tax credits, subsidies, or other benefits they may be getting. And of course, we can't deny it, right? There are, companies are at risk. What we are happy with is that for the most part, they're fairly insulated. So any grant money that they were thinking of receiving, tax credits, were distributed in the last 10 days. Actually, there was a quick action on behalf of the bureaucracy in the U.S. to get that out. But for the most part, and this is the limitation of being a VC. We've been very cautious to not invest in anything that, right, is not providing, a cheaper operating expense to whoever their client is. So maybe some of our companies rebrand to industrial efficiency. I don't know what they do, but in terms of that, but I think we're fairly isolated. But there are some certain industries that I think are going to be more impacted. I think when we think about carbon removals, right? I mean, there is the voluntary market. How do we really create a market without regulation? Biodiversity is another one where we haven't really been able to price it on a massive level. We've been able to do it on certain scale where you're able to get through regenerative agriculture better yields. But still, I mean, that's something that the market hasn't developed, and governments play a role. And then we're nervous for Europe. I think, there are some great regulations in place, but I think those will whittle down even with time. I think the general mood is moving that way.
Yeah, I haven't heard the word great regulations in a while from an investor.
But they create markets, right? You don't want them to last forever, but regulations can create markets.
Stephen, I was also going to, you can comment up, I was going to ask you, so if I think about the word cloud for this week, AI, Trump, and climate, the one that I'm surprised not talked about at all is China, because it has a huge impact on the world, obviously. And bringing it back to investing, and I think one of the things that's interesting is you talk about not wanting to invest in things that are subsidized, but China is clearly targeting certain industries and subsidizing them to the point where I was going to ask you, what do you think about investing in a market where China is going after it? Because you could say, all right, they're not playing fairly. Maybe I want to stay away from it. Or on the other hand, there are governments who are trying to balance that out with protecting their industry. So how do you feel as an investor about investing in industry where China has said we want to be the leader?
Well, I think a bit what Fiona said earlier. I think that we all live in one planet. So the first that do good, I'm with him. I really don't care. It's not a political game. It's really a survival game, a species survival game. One of the things that I foresee in the next 20 to 30 years, it's going to take time. 30 years, maybe 50 years. I may be wrong by 20 years, as big as it is. But I really believe that the green hydrogen, which brings automatically clean water, is going to help a significant amount of people in this planet. Beginning of the century, the past century, we were less than 2 billion. Now we are at 7 billion, almost 8 billion. We're going to go all the way to 11. I mean, this is a significant, massive problem. And everybody talks a little bit about, VC and returns and 2 to 3 years return, 5 years returns. There's no way. There's no way. This is a much more fundamental problem. So how do we protect our next generation kids? How do we make sure that we have sustainable thing? And I'm not a guru of hydrogen. I care less, actually. But I believe that this energy has the power, force, that is much bigger, much more powerful than the fossil one to send people in the sky if they wish. But it's not going to be done by batteries power. It's not going to be done by solar panel neither. So there is room for everything. But really, if we want to cater for that, we need sustainable energy that creates sustainable ecosystems, that create clean water, that create simple agriculture. Things that are very basic, what Fiona was saying earlier. So this is my focus, right? I want these big guys, these 40 trillion people to understand the fundamentals and to think about 30 to 50 years down the road and what do we do together.
Yeah. So maybe for the rest of you more on the early stage, how do you think about investing in an area where China is targeting? Because the balance is there may be some governments that are trying to protect their industries, and maybe that will help them be successful. But I think, Brianna, you said you don't want to invest in something that necessarily has only regulatory protection, but that in some cases that may be the only way to survive in this geopolitical world.
Yeah, I think it's no secret that from a global perspective, Europe is not the most trendy market right now. We're pretty behind in terms of bringing microchip production in-house so that we don't have to rely on China. We're still pretty behind there. So, we can only kind of work within the framework that we have at the moment and try to push for change. But yeah, right now we're still pretty dependent on them.
Okay.
Whereas China, for me, I lived over there. So there's a side of deep respect of ancient wisdom there. I do also have to compete with them in Africa where they can come in on the solar side or wanting to bring in industrial for waste management, or where I've got immersion4.org and immersion4.com where we do the lowest cost data centers because we have to be energy efficient. Or when we go into deep decarbonizing shipping, none of us have talked on shipping, but I have invested in a collaborative effort with several of the top scientists in the world to not only decarbonize shipping, because that also is, it's very much controlled by a lot of the Chinese communities and or those out in the sea, meaning there's no regulation. So it's been the most interesting side for my personal development. I mean, I couldn't believe that we still have so many pirates, and I'm talking pirates of energy, pirates of money, trafficking.
Let's not talk about Johnny Depp.
Yep, I tell you that all the way because I spent a lot of time up in boat building up in Bergen, and then I looked at different areas. I've got the team that's Parker Maritime Technologies. William Parker III, Dr. Parker, worked also for the U.S. Navy. He's built out technology with his AI systems, with his adaptation for shipping that actually can decarbonize shipping. 4% of the world's carbon is in shipping. It will be double and triple because we're wanting to move all the solar, all the technology we want. It's heavy. It has to be moved around the world. We're commodity driven now. So one thing about this Parker Maritime Technologies is the reason that some of our family offices and communities have invested in it. For me, it actually lowered the sonic sound that was killing the whales. Just to be able to do a retrofit for between 1 to 3 million on every ship, 286,000 ships that are moving right now across the globe, to be able to not only lower the use of the fossil fuels by reducing the drag in the ship itself, and then it will move to hydrogen, it will move to smart nuclear, but it's not there yet, but it also helps to save the ocean. And we learn from the technology that's developed around it. So there's certain things when we talk about commodities, when you were asking in a sense for the Chinese, but we are dependent on them. So I have to find ways to communicate with them, to empower them to participate in decarbonizing the planet as well.
Okay, great. Derek, if you want to add something there, and then I'm going to, last question, because I think we're out of time. I'll go around the panel for 30 seconds. What advice would you give to entrepreneurs who are raising money in this climate? But did you want to jump in on that?
On the China topic, I only pay attention to it as much as the world pays attention to it, right? So if we think that there's regulatory changes, if we think there's going to be tariffs, that's something we always have to consider. But I also look at basically, I mean, if you look at German solar, a bunch of these solar installers just were like wiped out because they had to write off their entire inventory because of the change in price, of price coming down too fast, right? So those are also risks you have to look at. And I don't think it's necessarily a China problem, and we shouldn't make this like some sort of culture war at all, because it's not, but they are, right, a large economy, right, that does subsidize a lot of their own industries, but you have to take a look.
Yeah, I mean, I'm not bringing it up as a culture war so much as they're an enormous player.
Yeah, I know, exactly.
We don't care about Zimbabwe subsidizing things, and then they tend to just play by different rules. You could argue that maybe our rules are antiquated, we're playing the wrong game, but I think the Western countries, Europe and the US, we assume that companies want to make a profit, right? And it's hard to invest in an area where a company will sell below cost.
Very true. And then I'm happy to actually jump into the final question.
Yeah, please.
I mean, this is just bringing it to the basics. Remember, we're VCs. You know, I am an Article 9 fund, so we are looking for that deep sustainability commitment for the lifetime of your company. But the key thing to fundraising is to balance having a grand vision, like the big market, but also delivering those results on time. Of course, with some margin of error, but you know, every VC shares every deck with each other. Everyone saw your seed deck where you promised X, Y, Z, but don't be too realistic, right? Shoot for the moon, but also stick to the plan. And if you can show that you are able to predict the future a bit, right, it makes it really much easier to back you, especially when it comes to hardware.
Great.
So it's very basic stuff.
Yeah, thank you for the invitation again. Thank you also for the sponsorship. I would say to close, I don't think they sell at cost. I don't think they sell because they cross-subsidy anything. I think they just have a different timeline. And in 20 years from now, that's when really we will see who was smart today. And the problem we have in Europe and in the US is that we can't think beyond 2 to 3 years return. I mean, at large scale. I mean, Fiona can do much
Except
better.
for this group.
Right, exactly. But no, at large, look, we are not so many. Here, decarbonization is the top #1 type of challenge. We still have diesel cars that just completely pack the promenade in Davos. I mean, that's reality, right? And we are going to use oil to the last drop, all right? However, those states are taking this long-term approach, and they are investing massively, and they have the time with them to make sure that when everybody, it's, dry up, then they will be the ones benefiting from it.
Great. Fiona, then Brianna, briefly advice for entrepreneurs raising money.
Don't think you're raising money. Think you're raising consciousness and being in a community collective. That's the first. It's about the people. It's about the purpose around the people, and then finding the values, because I've seen so many. I mean, in the investment banking world, where part of our family's been in for many, many years, you have these value-driven requirements. Do you make it to scale? Are you going to make it to seed A, B, C? What's your timeline? How is it? When is it we taking you public? Where are we going with it? And I just want to come back to one area there. You talked about China, but India, I've done a lot of work in India, and it's a very important economy as well, because the technology comes maybe wrapped with a different philosophy sometimes when you invest in India and invest together. So I have been able to blend also some Chinese technology, some of the best Chinese technology in some of the work that I do in medtech and investing into health and gut biome, and looking at, because if we're not healthy, how do we invest even to look at a new type of air conditioning that we need, and a filtration system? So it should be a combination. So I wanted to just place that when you're raising capital, think about the consciousness of how many people can you affect. Because for me, I'm a lucky investor in a way, because I've had failures. I've had a lot of failures because I've seen companies that didn't have a long run drive. And in that way, I can say, hang on a minute, you've got an IP here. I can combine you with this other great team that has skills here. And hang on a minute, you think you're valued and you have 80% of the company, this was last week. But hang on a minute, if I bring you in a 60-40 investment where you're going to be devalued, but you're going to scale it into 16, 20 more countries this year, I think that's a really wise step to take. So don't think about you as a individual or as an owner of a VC or of your company. Even for you guys, your VCs, I want you to grow. I want you to thrive and take what you've built and take it to as many people and the planet as fast as we can. Thank you.
Thank you, Fiona. I'll keep it brief. In addition to what I said earlier, so if you're a startup founder wanting to raise capital from VCs, as well as having a commercially viable business model, because we're going to be looking at the bottom line, I personally found it always so valuable to really hone the art of storytelling, because as a leader of your company, it is your job to convey your values and your vision and your purpose for existence to the investors you're talking to, and that's what's going to really resonate with them and have that that emotional reaction that you want to raise, especially in sectors like climate tech. So yeah, work on that pitch.
All right, fantastic. So we have another panel after this, where we're going to go a lot deeper into climate and energy, and that starts in 45 minutes. So because we have a break, they told us we do have time to take some questions. So I'll let some of you, if you want to go, and I'll say thank you to the audience, and the rest of you can say, so thank you for those of you who have to go. But if you can stay, we'd love you to stay and have a few questions.
Yes, thank you. My name is Simon Burdes. I am a partner at Green Investors. We are something between not a venture capital fund, but we are an investing company that does not only invest cash capital, but also our brain capital or human capital into building venture projects, but also companies in the hydrogen space. So I was keen hearing that you believe in hydrogen. That is usually somewhat of a mission to explain to people. My question is, we do have renewable hydrogen based on renewable energies, electrolyzers, mostly looking at the global south because it's cheap there and they have an export opportunity there. We also look at a megatrend called natural hydrogen, which is something that occurs naturally in the earth. And we have also one of our companies that we invested in here with us. So question is, did you ever look into natural hydrogen? What is your opinion on it? And the cost of natural hydrogen is around $1 a kilo. That could literally disrupt the energy transition and make natural hydrogen cheaper than electricity. So just a few words about that, and happy to connect later on as well on different topics.
We haven't yet made a investment in hydrogen into the supply chain. I have looked at it a bit, also into stimulated hydrogen. Ooh. I think for me, what's always been hard in that vein is we tend to invest in products, not projects. And most of what I've seen feels like once the technology is ready for me, it's actually more ready for infrastructure type investing, right? And building projects. But I do find it a really interesting area.
So I've done hydrogen with certain groups, and I will say we're moving, as you asked, into different realms of hydrogen. There's been a lot of commodity finance and infrastructure in Europe that put into hydrogen, and I'm not sure it was the right hydrogen technology, but they've put too much money in that infrastructure, so they're going to keep it going. And they don't want to. They've went in too early with tech that probably wasn't the right investments personally, and so that's what happens. And so then they want to give a return back to the government of Germany, or whether it be in France with more certain areas of nuclear where they're having to replace with smarter nuclear, with fission and fusion and moving forwards. I had the joy of Nassim Harriman and different people looking at how are we moving tech into that. But for hydrogen, we need it. There is an investment thesis that can move really radically forwards. We've just been doing some into Brazil and Latin America. So I don't talk publicly about some of the other family office and larger scale investments. We do work with major banks, and so those kinds of bonds are really important, and that we can talk offline on.
Well, maybe, sorry, I just quickly answer your point. Natural hydrogen is part of the mix, not a problem for me. I think hydrogen is not made for all countries. I think actually in Europe, and to some extent in the US, but certainly in Europe, it's not the best and the smartest energy. The reason is we are over infrastructure equipped. And so the cost of running that industry in the middle of a very efficient infrastructure model, it is not really making a lot of sense. And because of that, we are letting the whole field to the Middle East, India, China, and all of that, because we don't understand the rationale of it. But in countries where you have significant amount of land, and as you said, large populations and climate deteriorations, drying up and all of that, I mean, those guys, they don't have anywhere near the capacity to bring the infrastructure I was talking about in order for them to fast sustain themselves. So the hydrogen itself is the only long-term solution, including the shipping industry, because that is the energy of the future. So it's not going to be tomorrow. It's going to take 30 years, it's going to take 50 years, but I'll be around even if I'm quite old, and I will witness that one.
There's two questions here and back there.
Do two more questions and then wrap up. Then I'll believe you were first.
Thank you. My question, given that the sustainability transition is more or less inevitable, I think we can all agree on that, less exploitative, more socially equality-based business models might bring less margins in the future or take more time to bring the margins for VC. capital raisers. How do you feel about that when you take that into the equation? Is the VC world ready to accept less profits on the short term?
I won't answer that one because clearly my experience is no.
Yeah, I think there's a bit of a yes and no. As someone you mentioned earlier, Scott, about how, you know, when you ask the LPs, a lot of them say like, yeah, we're pro-climate, but the reality is they care about the bottom line. But we, as a VC, we get to structure the thesis of what we want to invest in, and then it's our job to try and justify that to our LPs. So because I've been working now with a lot of hardware, a lot of built worlds, and in my previous fund as well, a lot of IoT and connected hardware, we know from day one that the time to market is going to be longer, that the time for potential exit is going to be a lot longer than pure software. And that's why so many more VCs are investing in pure software, because it's quicker to market, quicker to commercialize. But yeah, we just have to think about the long game. So as we don't expect all of our companies to become unicorns. It's much harder and fewer in the hardware space, but we are willing to wait.
I think in terms of social impacts, I mean, we will take a look at how our companies are performing, what communities they're solving a problem for. Many oftentimes you can find companies that are reducing costs, increasing access for low-income communities or diverse communities, and we will attempt for that. But there are boundaries to, as in a narrow investment thesis, on how narrow you can go when we're already doing hardware, a lot of hardware infrastructure. But I think if we're really, really focused on lowering costs, I don't necessarily believe in trickle-down technology, but you can identify technologies that are providing for the right communities. And we have some in the US, right, that have created innovative business models that allow for lower income households to have quality heating that they're not paying for, right? That is reducing costs for their landlords, and then that is actually in some ways passed down to the tenant, the long-term tenants. But it's not a direct focus. I would like to see more funds in that space. There are a lot of social justice funds that have focused on healthcare, financial inclusion, that have done a good job. I just haven't seen much with climate-focused funds being able to narrow that in the time frame that VC funds are expected to return.
Whereas Virtue Ventures was just launched. There we go. And that's I'm a co-founder of Virtue Ventures, so it should speak for itself. There's Virtue, and then there's Ventures. So it's virtueventures.org, and that's our spectral collective consciousness, people, personal liability, reliability, and where do you walk and talk and plant and grow and feed. And so it's really rooted in the essence of, it is a venture capital model, but it has a longer walk and path that bridges us to go together forward. So thank you.
Next question.
Good morning, everybody. Thank you very much for this speech. I will ask a question to everybody in this room, and also for you, Scott, and the panelists. A very different question. I'm an investor. My name is Malik, living in London. We are investing in a company, a technology, which found the solution to world's energy and CO2 problem in heating and cooling. Two questions. One, think about there is a heat pump or a solar panel, and there is a radiator inside it and nothing else. Only one pipe. Outside is -2, inside is 25 degrees Celsius. No boiler, no fossil fuels. What I mean? Everybody heard about the waste heat. Our planet globally produces 3 trillion gigawatt energy per day. 40% of it, 1.2 trillion gigawatt energy per day, is waste heat under 100 degrees Celsius. There is no technology in the world which can recycle it, except the one we invested. My question is, if we say hocus pocus and all the chimneys adapted waste heat recovery unit, very small unit, what happens? Do you think that all the governments, my question is, focused on waste heat recovery technologies, which is the most simple way to stop carbon footprint? Thank you.
mean, I'll just say that I can't comment on the physics of it, but I know he's not as popular as it used to be, but Elon Musk has famously said that why would we build a fusion plant on Earth when we've got one that comes up every day and provides us all the heat and electricity and power we need? So I'm sure there are ways to kind of capture it. Part of it's through solar and electricity. Part of it's probably through heating and other technologies. Why not? Makes sense. It's free. Comes up every day. It's pretty reliable.
Well, I will say, come and visit our farm here in Davos. Not my farm. It's a farm where I stay. Those are farmers, real farmers. They have cows, and they heat their house exactly the way you just described it. So it's something that is potentially accessible. I think today we have a problem of cost. It's not so much a problem of technology. Being hydrogen extraction, being simple renewable solution as you just described, using natural element. The truth is that if we were to shift to this at scale, another part of the economy will go down very fast, which is not really what the geopolitical people want. So that's why I'm saying this is going to come in the next 20, 30, 40, 50 years. It's not a question of, does it make sense or not? We could all do it, but if you were to do that, you need 30 years to recover your investment. So what the hell, diesel works fine. Yeah, I'm sustainable, but diesel works fine. Maybe later on, when I am rich and I can put 10,000 Swiss francs in the solution, I will, but not for now and not for my generation. And that's a common general behavior because it's way too expensive. Put these costs way down and people will buy them by the minute. But it's not where we are at this very moment, 2025.
Yeah. Maybe just adding quickly before we wrap up, we do have the technology already, right? I mean, two of the things that you mentioned just now, we've invested in one company called allocating that's optimizing how heat pumps are installed because quite often it's done inefficiently. And there's another one called neocarbon that's doing direct air capture that is utilizing existing infrastructure and capturing the excess heat. So, we have the technologies, but the real question now is, can we scale those? And of course, in Europe especially, there is that funding gap, which is why I was so happy to see Sarah on the panel earlier doing Series B. I'm based in Germany. I was like, yes, we need more of you. Thank you. To make sure that we can properly roll these technologies out.
Great. Do we have can we keep going? One more, two more? Okay, we're out of time. I love the fact that everyone is still staying here. It means that there's some interest. So thank you for the panel. Thank you for coming. And hopefully we'll see you is it 11:45?
So plant some trees,
I think it's
please. That's all I ask.
At 11
not
o'clock.
Just in your own garden.
Come back here for 11 o'clock for the panel
everywhere.
on energy.
Thank you.
And I'll be moderating that too, so hope to see you back.